Hey, listen, the year was 1993. 1993, that was a long time ago, but listen, that's the year that my wife and I bought our very first house. We bought our very first house. Listen, it wasn't easy. It wasn't easy, but we did it. Now, how did we do it? That's the kicker. How the hell did we do it? We were so young. We had no down payment money, man. We were, well, I'll say it. We were kind of broke. We were limited on funds. How about that? Let's make it politically correct. We were limited on funds. How the hell are we going to buy our first house? Now, typically to purchase a house, you need a nice large down payment. I don't know, like 20%. That would be your conventional loan. We thought we would never buy a house. 20% down? We were young. We were in our early 20s, mid 20s. So what did we do? We found out about this great program called the FHA. Now, I know you've heard about it. The FHA program allowed us to become involved, to get involved in home ownership. Oh my God, if it wasn't for that FHA program, that's how we purchased our first house. It was beautiful. And guess what? It still exists today. It still exists today. Not just for you, but for your clients. It's your job to tell people who deserve to own a house, just like I did, and just like maybe a lot of you do. Now, how does it work? Well, let's start off with the history of it quickly because I'm not a history buff. It started in 1934. Now, what was going on in 1934? Yeah, the Great Depression. So it was the government's way of stimulating the economy, getting people to buy property, getting people to become homeowners. Now listen, the deal is this with FHA. It's not intended on helping people go out and buy a mansion, but rather something small, simple. It was intended on giving people a shot at home ownership. So fast forward to today. The benefits are rather clear, and I want to share these benefits with you. Number one, the most attractive thing about this program is the low down payment, and that's how my wife and I were able to get into our first home, that low down payment. It wasn't requiring 20% like your conventional loan. It only requires 3.5%. 3.5% down payment is a lot less than that typical 20%. Let's assume your buyer is interested in purchasing a property, and that property is $500,000, $500,000. Let's do quick math, just very quick math on $500,000. Your typical conventional loan would be 20% down. 20% of $500,000 is what? Yeah, $100,000. You have that in the bank? Most first-time buyers don't. Let's do that same amount. $500,000 times 3.5%. Do the math. Yeah, it's $17,500. It's a reasonable amount to save up. Might take you a couple years. Might not take you any time at all, and I'll tell you why. Because here comes benefit number two. Benefit number two says that down payment can be a gift from a family member, from your parents. Now, most conventional loans won't allow a gift. They want that buyer to come in with the money. Not FHA, man. Again, FHA is encouraging people to buy property. They want to give people a shot. Benefit number three, it's a fixed rate. The interest rate is fixed for 30 years. Whatever you and the bank agree to when it comes to that interest rate, guess what? It's gonna stay that way for the next 30 years. That's called fixed rate. Benefit number four, when qualifying for this loan, your FICO score, your credit score doesn't have to be stellar. Are you kidding me? Listen to this. Your credit score can actually be poor. What I mean by that is this. The minimum credit score required to get that 3.5% down payment is 580. Now go ahead, look it up, Google it. 580 isn't a very good credit score. But the FHA is saying, you know what, we understand. You bring us a 580 FICO score minimum, aside from other qualifications, of course, employment and all that other good stuff, your taxes and all that stuff. Not a big deal, but give us a minimum FICO score of 580, you're in. One last benefit that I'd like to share with you, and to me it's important, because it allows the buyer, the borrower, to make their monthly payment nice and comfortable. Now, what am I talking about? The FHA program requires the borrower to make their payments with an impound account. Now, what is an impound account? They want you to make that monthly payment, which will include your principal, your interest, your taxes, and your insurance. Those four, your principal, interest, taxes, and insurance. P-I-T-I, pity. It's a pity you gotta make the payment, but with that pity payment, the P-I-T-I payment, the impound account, so when it comes time to pay property taxes, you don't have to worry about it because you've been paying it all year long. It was just disguised. It was disguised in your payment. Now let's talk about what type of person can buy these properties. Ready? Now it's commonly assumed that this FHA program is for first-time buyers. Let me set the record straight. It's not just for first-time home buyers. It's a great advantage for first-time home buyers. What a great way to get into the door of home ownership, but it doesn't have to be a first-time home buyer. Let's assume you bought your first house like I did back in 1993 under FHA, and I paid it off. And today I want to buy another house under FHA. I can. You can have one FHA loan out at one time. Now, the kicker is this. It has to be your principal residence. So if I choose to use my FHA loan today, I gotta live in it. It's gotta be my principal residence. So keep that in mind. It's not just for first-time home buyers, but you can only have one at a time. Hey, listen, you don't have to just buy a single-family dwelling. Under the FHA program, great news, you could buy a duplex. You could purchase a triplex. Hell, mother of mercy, you could purchase a fourplex. You just have to live in one of the units. In fact, since you're gonna live in one of the units, if you're planning on buying a duplex, triplex, or fourplex, you might wanna consider the GRM. Become an investor, man. Think like an investor. Now, what is a GRM? Check this video out right here. It'll explain it all. We'll see you next week.